I am Ben Reppond. Welcome to my YouTube channel. Today is April the 2nd, 2025. This is the Market Insights video, and I'm going to begin with the dashboards, which I do every time. Point out the things that I see here. In the yellow box, kind of in the middle of the page, is what happened last week. We're measuring seven items. 6 are equity-based. 4 in the U.S., Dow, S&P, NASDAQ, and Russell, and 2 abroad, developed markets in one ETF, EFA, and then emerging markets in the ETF, EEM. And then the seventh is bonds, long-term government bonds. So in this yellow box is what happened last week. Everything was negative. Some more than others, but everything, including bonds, were negative. Going from down the 20-year Treasury bond down 0.62, all the way down to the NASDAQ 100 down 2.47. In the pink box, this is the year to date, and this is the order I have things in based on their order in the pink box. The developed markets developed markets, non-US, have a gain of 9% year to date. The emerging markets, underdeveloped countries, are second with a gain of 4.66% year to date, and government bonds 3.22. Then you drop way down to the Dow, down 2%, all the way down to the Russell 2000, down 9%. So all the U.S., these 4 major U.S. equity indexes, negative. To the far right, you see where they are relative to their moving averages, the 20, 50, 100, and 200-day moving averages. So you can see that the top 3 are positive some of the time and negative once. The U.S. equity indexes are negative in all 4 time periods. When we break the S&P apart into its 11 sectors, 11 component parts, in the yellow box you can see that that is a mixture, mostly negative, but there are 3 sectors that are positive. 2 are barely positive, consumer staples, definitely positive. And some are quite negative. In particular, technology is the most negative. And on a year-to-date basis, we've got 7 of the 11 that are positive. Some of them have a green dot, meaning they're above their moving average, one of those moving averages. The other 4 are negative in all categories. The bottom 3 are quite negative, and those are technology down 11%. XLY, consumer discretionary, down 12%, and retail down almost 14%. So a lot of this is probably due to the tariffs and the reaction to that. I'll make a comment on this because it kind of jumps out at me, is that we have a sector rotation strategy, and it's rotating into the top sectors all the time. So it's been seeking out these sectors that are the top performers: energy, healthcare, and consumer staples. The top 3, we've been in those a lot of this year. And in our index strategy, we have been in the value side of the index, the Dow, which has gone down, but it is not down nearly as much as the S&P, and certainly as much as the NASDAQ 100. So that's one of our approaches for minimizing risk and optimizing return. That is certainly not perfect, but it has worked pretty well, particularly with the sector rotation. It's worked well because it's kept us in the sectors that actually have been gaining some of the time, not all of the time. This is the S&P 500, and it is, you can see it over this long period of time. This is a 30-month period, 2.5 years, and mostly it's gone up, but, and I draw an arrow for that, but you can't get away from the fact that for about a month or so, maybe this is about a month and a half period, I'm just looking at it, you can see that it's gone down almost every week. And so don't know where it's going next. At some point it will turn around and go back up. But I would say this, that the news, this is why I don't have TVs, is that the news and what you observe is different many times than the stock market. The stock market will actually, what I've seen in the past, will turn around and go back up when the news continues to be negative. It'll ride the news down, but then it turns around and does its own thing, at least for a while. Sometimes it'll just, for an indefinite period, will go up for quite a period of time, and sometimes it'll go up for a shorter period of time, then turn around and go back down. So it's the news and the economy are not necessarily correlated with the stock market all the time. Okay, this is a candlestick chart. You can see the red candlesticks and the hollow ones. The hollow ones mean it starts at a bottom and goes up here. That makes it a hollow one. A red one means it starts here and goes down here. And you can see toward the right side of the chart, particularly this year, a lot of red ones. However, if you back it up prior to, let's say, last fall, several months ago, you can see most of them, the vast majority, were hollow. In other words, it was an uptrending market. But in the last several months, it has shifted to a declining market. When I do relative strength of the NASDAQ versus the S&P, if this line goes up, that's favoring the NASDAQ. It's performing better than the S&P. Vice versa, if it goes down, it's favoring the S&P. So you can see, I drew a black arrow so you can see that it's in a period of decline. I could draw one for the last month and a half and it'd be a steeper decline. And if I drew one from the very beginning, it would be up. But I think what's really dominating the market now is the decline in the market, and particularly the decline in the S&P and the NASDAQ. Growth and value. Another relative strength chart. So this is a little more zigzaggy. So when it goes up, favoring growth, and when it's going down, favoring value. Growth tends to be more NASDAQ 100 related, but not entirely, and value tends to be more Dow related, but not entirely. But again, the black arrow shows that a decline, meaning not favoring growth and favoring value. When the S&P 500 is compared in relative strength to the Russell 2000 small cap index, IWM, if it goes up, that favors large cap, the S&P, and when it goes down, it favors small cap. So you can see that this has been mostly in an uptrending period, and the current environment definitely is favoring large cap over small cap. Government bonds, they have bounced a little bit off of their bottom. You can see where they are right now. This is the long-term government bond, TLT, but I don't see it in an uptrend at this point, but that could change. It did go above its 20-period moving average. The dollar stopped its decline and has bounced a little, is going up a little. We'll see how far it goes. It's still below its 20-period moving average, but long-term, over this 4-year period, has been in an uptrend. The one that's doing the best is gold. Gold is doing exceptionally well, and the line is it's not a straight line, but it's not bouncing all over the place. It is generally in an uptrending period and is quite a bit above its 20-period moving average. Is it going to correct or keep going? I don't know. It seems to have momentum at this point, so I would say from what I see, it looks like it's going to keep going. If it corrects, it doesn't look like it's going to correct much. Silver, somewhat the same, but much more volatile in its up and down component. And you can see that by the number of times that it crosses over the 20-period moving average, both up and down, and showing it's kind of erratic. But it's also back up to an all-time high and doing well right along with gold. Bitcoin for, what is that, 5 months now? Bitcoin has been in a period of decline. And we have, in our Bitcoin strategy, we've been in money market quite a bit. So kind of riding this thing out until it decides it wants to go back up. Okay, volatility index, the VIX, a 30-month chart. Each move equals 1 week. So it does go up and down a lot. But I'm looking for a trend, and I drew a black arrow from the bottom up to present to show that the trend is up, meaning volatility is increasing, which generally means equities are declining. I put a black mark at 24 to show the level where I think risk starts to get pretty high, and we're not there yet, but we're moving in that direction. Asbury Research has 2 positive metrics and 4 negative metrics. And when it has 4 or more, they consider that negative. Relative performance. Now, this won't surprise you based on the information I've given you. Bonds are stronger than stocks. Low volatility, usually meaning value, but low volatility is more favorable than high beta or high volatility. Blue chips, the Dow, more favorable than the S&P 500. The broad market, meaning the S&P 500, is stronger than the NASDAQ 100. Value, stronger than growth. Developed markets and emerging markets, stronger than the U.S. These are for all 3 time periods, the last week, the last month, the last quarter. Government bonds are stronger than corporate bonds, and corporate bonds, high quality corporate bonds, are stronger than high yield bonds. The U.S., now this has been a mixed chart. We've gone from, it wasn't too long ago, but a few months ago, it was pretty much all U.S. was stronger than all the other countries. Now, the U.S. is stronger than Taiwan. Go down there and you see that white, that's Taiwan. We're stronger than Taiwan in the last week, the last month, the last quarter. All other countries or regions of the world are stronger than the U.S. for all time periods, almost all of them. The one exception is Thailand, but all the others stronger than the U.S. for all 3 time periods. Okay. Using my example of the U.S. versus South Korea, when it goes up, it favors the U.S. When it goes down, it favors South Korea. That has been coming down, which has favored South Korea over the U.S. for the last couple of months. This last week, it ticked up just a little bit, favoring the U.S. Gold and silver. So this gold has crossed over the $3,000 mark per ounce for spot, and it's $3,086 per ounce of bullion, and that's a gain of 2.1% over the previous week. Silver, 34.62 spot, You add the markup on top of this, and that's a gain of 3.6% from this last Friday to the previous Friday. The gold-silver ratio is 89-1. A monster box, 500 rounds of generic silver, is $17,720. That is obviously including the spot price plus the markup. The markup, it's hard for me to believe this, the markup is 82 cents per ounce. That's down from 3 years ago. It was $5 an ounce on generic and $10 an ounce markup on Silver Eagles. Wow. And it's been steadily coming down, to $2 and then $1.50 and then $1, and now it's down to 82 cents. I've never seen that before. That brings price for a round to $35.44. Okay, thank you for watching. If you have questions or comments, leave them in the comment section below.